Well. Hello. Good morning, ladies and gentlemen, boys and girls. This is your host here, Robert Garcia, a member of the Eric Stewart Group with Long and Foster. And I hope you are enjoying this day. Just like Britney Spears saying that song, Oops, I Did It Again. That's exactly what the Federal Reserve did yesterday. Federal Reserve went ahead and increased the interest rates by 75 basis points. So that's a very, very large increase. We've been seeing 25 basis points or 50, but this time it was needed to get the big missiles and go for the 75 basis points. This is in an effort to reduce the inflation that this country has been going, that, as you know, in the month of May, it didn't shrink. And actually, inflation went a little bit up at 8.6%. They were hoping that the April coming down to 8.2 wouldn't make a change, maybe to under 8, but it didn't. It went up again. So that's why one of the main reasons why they're doing this. But let's take a look exactly what really means for people that are in the process of buying and selling real estate. Okay, it's very unique what's going to happen. First thing is going to happen is the market's going to need to react to this. There are two different opinions. Some people said yes, interest rates will continue to go up, and some other people said maybe interest rates don't go as high because banks cannot afford to lose potential buyers. Right now, the average broker lender out there, it produces probably 100 pre-qualification letters. They are maybe only getting about 20 of them coming back under contract because of what's happening in the market. So you got to keep in mind that for us as a buyer, you may be caught in the middle of buying a house right now, and maybe you haven't made an offer. So I highly recommend you go back to your lender to rerun the numbers just to see if what the number you were pre-qualified first is still a good number, or you need to make an adjustment. But if you're already under contract and you haven't locked in your rate, you are probably here for a rude awakening when it comes to your new monthly payment. So you got to take that into consideration right away, immediately. That's going to be something that look at. One, go back and check with your lender. Two, is just to make sure that if you're already going to be locking in at a quarter percent, half a percent higher than before, that you actually budget for that. Okay. Now let's talk about sellers. So what sellers are going to experience? Sellers will probably most likely experience a diminish in the number of showings on their properties. And I think we're already starting to see less showings at homes. At least in the listings that I have, I see less showings. And of course, less showings, less buyers, less interest, less offers, less competitive offers. Okay. So you probably will start seeing some price adjustments coming up. I think early May was the peak of the highest point in the real estate market. And I think right now we're probably going to see something just continue to come down. How low they're going to go, we don't know. That's exactly something that nobody can tell us, how low the prices will go. Some experts says that if you look at what happens to the S&P index, that maybe they've fallen down 20%, which is now considered a bear market. Maybe that's going to be what's going to happen in the real estate market. I don't have the crystal ball. I'm not going to play that card right now. We just don't know. The market needs to react. Probably in 60 days, 90 days, we will have better data for this. But for sure, with the cost of life already very expensive around here, number one, and number two, the inflation, which is related to this oil and all those things, and then now having a higher interest rate is probably going to cause some pausing in the market. Some people probably going to have to think about twice before they buy the next vacation home, before they buy the next investment property, before they buy the next thing, because better off to keep that cash in the bank in hand than just being out there spending money without having any purpose. So recently, Redfin and Compass announced that they're going to be letting go about between 8 and 10% of their workforce, their employees, their W-2 people, right? And I believe also Rocket Mortgage is about to make an announcement of letting some people go. That's because the refinance business is almost gone. So that hints us the real estate market, it's going to go under a big adjustment right now. Brokers have been spending money. I think like Compass has been spending about $100 million every quarter. If they made money or not, I don't know that yet, but that's an insane amount of money they're being spending. And I get it, they want to gain market share, they have the deep pockets and they can do it, but that also is going to have a price, and they have to pay the cost of that spending. So with that in mind, you're probably going to also see a shake in the real estate industry in terms of realtors as well as loan officers, settlement companies, meaning that a good percentage of them are probably going to have to exit the market or become part-time agents. And the last thing you want to do is work with a part-time agent. Believe me, you don't want to work with a part-time agent. You want to have a full-time agent that can actually help you and guide you. So now more than ever, very important to understand that you need to partner with somebody that has been in this kind of market before. I was in the market meltdown of 2008. I was just doing that. We were selling many homes, and all of a sudden the market paused and just the brakes got slammed, and now we have to reinvent ourselves as real estate agents. So very important to get the proper coaching from a realtor, whether you want to buy or sell a house. I'll be very careful right now if you're a seller, because this estimate may tell you something, but the reality, it is very different. I recently was looking at a house that here in near where I live, that it's this estimate says the house is worth 1.125. The house just took a price adjustment of $75,000, and now the house is about $900,000. So 1.15, 75,000. So it's about, more than 200,000, and just an adjustment. And the house has only been on the market for about 3 weeks. So again, I don't want to alarm you. I'm not telling you that's what it's coming, but some sellers are going to realize that they were probably pricing their homes too high. So what I'm doing right now with my clients that are thinking about selling in the next 30, 60, 90 days, we are having constant meetings about the market condition and the changes. And I'm looking specifically to homes that are not getting reabsorbed by the market. The inventory has been growing about 3% every week, but the absorption of that inventory is only be close to 1%. So there is still a 2% that is lingering in the market, and it's staying longer, maybe 2, maybe 3 weeks. It used to be only 10 days, less than 10 days around here in the Washington, D.C. metro area. So now things are starting to sit a little bit longer. So I want you to pay attention that if a house sits 30 days, no activity, no offer, that's a house that's a good candidate for a price adjustment. And believe me, it's like a domino effect. Once the first one take a price adjustment, the next one, the next one, the next one, and everybody else will be taking the same adjustment. So I just want you to be very careful with all those things as they are happening. As you know, the market will be going through different changes. Pay attention to what's happening in the news. And if you're thinking about making a move in the near future, make sure you hire the local realtor, the realtor that is educating you, the realtor that is putting content for you to understand what is happening, and the realtor that is looking after your best interest. Remember, at the end of the day, I'm not about sales pressure, just education. I believe a well educated customer will make a better and informed decision that will have positive results or outcome for their plans. Remember, guys, this is Robert Garcia here in Washington, D.C. And if you guys have any questions, feel free to send them through here, or you can always call me or text me to 402-865-5626. Please, please, please like, subscribe, and follow my channel. I promise every week I will provide and deliver to you great content that you don't want to miss. Thank you, everybody. Take care. Bye-bye.